Hello everyone, welcome to my channel again as I have brought another interesting video on payments. In the previous video, we have learned about the payment fundamentals, right? Today we are going to decode the banking and payment ecosystem in a very simple, practical and project friendly way. By the end of this video, I hope you should be able to look at any payment scenario and confidently draw the ecosystem around it. So in this video, we are moving from the basic question of what a payment is to a more practical question, like who is involved when a payment actually moves. Like think of a payment like a train journey. Okay, the customer is the passenger, the bank is the station, the payment rail is the track, the clearing house is like the traffic controller, and settlement is where the journey is actually completed. So in simple words, a payment is not just money moving, it's a coordinated activity between multiple institutions, systems, rules, and teams. Let us begin with the foundation. So, what exactly do we mean by the banking and payment ecosystem? The banking and payment ecosystem is the complete network of institutions, the systems, the rules, and the infrastructure that allow money to move from one party to another. In simple words, it is the machinery behind a payment. So a payment does not move in isolation. It may involve, the customer, the bank, the central banks, the clearing houses, the payment schemes, the correspondents, market infrastructure, regulators, technology providers, compliance systems, and so on. So think of it like a food delivery order. So you place the order, but behind it there is a restaurant, a delivery partner, the payment gateway, the map system, the customer support, and the settlement between the platforms. Okay. Similarly, when you send money, many such entities work behind the scenes. So which are entities? These are the entities. So as a BA or someone who is working in the payment domain, you must not only know the message format, you must also know which participant is responsible for which action. Now let us convert this definition into a visual layer model. So starting from the top, the customer layer. So this includes your individuals, corporates, merchants, and the governments. These are the people or entities who want to send or receive money. Next is the channel or access layer. So this can be your mobile banking app, your internet banking app, branch application, APIs, or file upload system. This is where the payment instruction enters the bank. Then comes the bank layer. The originating bank, in this layer, the originating bank validates the payment, check the balance, debits the amount, debits the account, and routes it forward. After that, the payment enters the network scheme or your clearing layer. So in this this layer could be like infrastructure like RTGS, Swift, instant payment system, or card network. Then comes the settlement layer. This is where uh, you know um, this is where the actual financial obligation is completed, either through central bank accounts or correspondent accounts or through some nostro hoster accounts. Finally, the receiving bank. Finally, the receiving bank validates and credits the beneficiary. And in this whole in this entire layer model, the actors who support are here. So they are the regulators, the compliance system, the treasury teams, the tech platform, the operations team. So once you understand those layers, you will understand why this topic is critical for someone who is working as a payment BA or payment SME or payment product owners or even a tester. So if you only know the message formats, you may still struggle in real project meetings, right? Stakeholders may ask which party owns the validation. Is settlement through central bank money or the correspondent accounts? Is this payment going through RTGS or correspondent banking or your Swift or automated clearing house? So many beginners get confused here because they think payment knowledge only means knowing your MT103 or PAC 008, but real knowledge means understanding the ownership. So in simple words, you should be able to answer who does what, where, when, and why. In a real project, if a payment is stuck, you need to identify whether the issue is with the routing, compliance, liquidity, clearing, settlement, or a beneficiary posting. Now let us meet the major participants in the payment ecosystem. So there are 12 major participants in the entire payment ecosystem that we need to remember. So is the first is the customer. So when we say customer, we should not think of only a retail customer sending money to someone like a friend. A customer can be an individual, a merchant, a corporate, a government, or even another financial institution. So in simple words, the customer is either the initiator or the receiver of the payment. So in a real banking project, the customer type matters because retail, corporate, merchant, and government payments have different channels, limits, approval rules, compliance rules, and the reporting requirements. Second is the originating or debtor bank. So this is the bank that receives the instruction and starts the payment. It does the validation of the instruction. It checks the balance. It checks the limits. It performs the compliance check, generates the payment message, debits the customer account, and sends the instruction to the next participant. Third is the beneficiary bank or the creditor bank. So this is the bank that receives fund and credits the final beneficiary. It validates the data, posts the fund to the ledger, credits the beneficiary account, and manages the rejection, repairs, or investigation. Yeah, think of the originating bank as a think of the originating bank as a airport from where the flight departs, and the beneficiary bank as an airport where the flight lands. So both must do their checks properly. Now fourth is the correspondent bank. So this is very important in cross-border payment. A correspondent bank is used when two banks do not have a direct relationship with each other. For example, SBI may not directly hold USD accounts with every US bank, so it uses a correspondent bank that can help settle the USD payment. So in simple words, correspondent bank acts like a bridge. So one important concept I want to mention here is the nostro vostro. So from my banking experience point of view, the account I hold with another bank is a nostro account. So in this case, our money with you. From the other bank's point of view, it is a vostro account. Your money with us. So basically means if SBI is holding an USD account with Bank of America, USD SBI will basically refer to the account holding with Bank of America as its nostro account. On the other hand, Bank of America will basically refer to the SBI's account as SBI's vostro account. So in simple words, think of it like this. So if I keep my bag at your house, for me it is my bag at your house, but for you it is your friend's bag at my house. So it's the same bag, but a different perspective. So fifth is the central bank. This is the apex authority. For example, RBI we have in India, Federal Reserve in US, European Central Bank (ECB) in Europe, Bank of England in the UK, RBA in Australia. So it may operate or oversee the settlement systems, provide settlement accounts, manage RTGS settlement, and ensure the financial stability. In high value payments, central bank settlement is extremely important because it provides finality and trust. Sixth is the clearing house. Um, this is the entity that exchanges and often nets obligations between banks. In simple word, it helps banks exchange the payment instructions in an organized way. Seventh is the payment scheme. Payment scheme is also called the rule book owner. It defines the participation rules, message standards, timelines, returns, disputes, and the operational obligation. Think of a scheme like the rule book of a cricket tournament. It says who can play, what rules can be applied, what happens if someone breaks the rules, and how disputes are handled. For example, take an example of Visa card network. So Visa card network is a payment scheme where Visa defines the rules of payment. Then comes your payment uh, processor or operator. So this is the entity or system that actually processes the transaction according to the scheme rules. Now, remember this one thing. So scheme says what must happen, and processor executes um, that activity. So many beginners think scheme and processor are always the same, but they can be the same in some. They can be same in some ecosystems, payment ecosystem, but often they are different. So in a real banking project, this matters because requirements may come from the scheme, but implementation may happen in the processor or in the gateway or in the payment hub. Ninth is your regulator. So regulator or supervisor ensures that payment happens safely, lawfully, and fairly. They focus on the anti-money laundering oversight, sanctions compliance, consumer protection, risk management, and operational resilience. Tenth is your treasury or liquidity. So treasury or liquidity management ensures that the bank has enough money in the right accounts to settle outgoing payments. In simple words, even if the payment instruction is perfect, the payment may still get delayed if the bank does not have enough liquidity. 11th is your compliance, AML, and sanctions. Compliance, AML, and sanctions team basically act as a control gates that check whether the payment has sanction risk, AML risk, fraud risk, politically exposed person connection, or embargoed jurisdiction issue. 12 and the last is your technology vendors or the infrastructure provider. So Swift is one of the infrastructure provider. So technology vendors and systems include your Swift gateways, payment hubs, sanction engines, fraud detection engines, reconciliation systems, reconciliation platforms, APIs, and core banking system. So technology vendors are usually not legal participants in the payment ecosystem, but in project work, the BAs, the product owners, the product managers, testers interact with this system constantly. Now that we know the participants, let us see how the ecosystem changes based on the payment type. So a domestic account usually flows from sender um, uh, to the sender bank, and then to the domestic clearing, then to the beneficiary bank, and finally to the receiver. A card payment, in case of card payment, it's a bit different. It involves your card holder, the merchant, the acquiring bank, the card network, your issuing bank, settlement, and authorization. A cross-border payment may involve your sender bank, SWIFT, correspondent bank, beneficiaries, and the beneficiary bank. Direct debit is also different because the collection starts from the collection starts from the pay side. For example, an insurance company collects a premium from the customer's bank account based on a valid mandate. Now, many beginners get confused because they try to apply the same model to every payment. But remember this simple rule that first you need to identify the payment type, then identify the ecosystem. So be always mindful while writing writing requirements. You always ask whether it is a domestic payment, it's a cross-border payment, it's a card or direct debit or instant or bulk salary or high value artists. So that's a very important question that you should ask before writing your requirements. Next, we will understand two practical concepts: your direct participant and the indirect participant, and your front office, middle office, and back office. So, a direct participant is directly connected to a payment scheme or payment system and settles directly, while an indirect participant does not directly access the scheme or the settlement system. It uses another sponsor bank or direct participant. In simple words, a direct participant has its own entry gate. A direct participant has its own entry gate, while an indirect participant enters through someone else gate. Okay, why does it matter? Because routing, settlement, responsibility, exception, ownership, and cutoff dependencies can change depending on the direct and indirect participation. Now, with this, let us try to understand the front office, middle office, and back office, and their role in the payment ecosystem. So, front office is the customer-facing mobile app, internet banking, branch banking, relationship manager, and corporate portal. Middle office handles the controls such as monitoring, limits, compliance oversight, exception, supervision. Back office handles the operation part that includes the processing, repairs, investigations, reconciliation, and the settlement support. So, in a banking project, one payment, one payment issue may involve all the three. So, customer complains to the front office, middle office might need to check the controls, and back office have to investigate the actual payment processing. Okay, now let us classify the main payment system categories. RTGS or high value system are used for urgent, large value payment. RTGS means real time gross settlement. Real time means it happens immediately, and gross means each transaction is settled individually. Okay, SCH or low value clearing system are usually batch dependent. They are often used for bulk payments such as salary payment, utility payments, and direct credits. Instant payment are near real time and available 24/7. Um, UPI is one of the example for instant payment. Then we have the card network. Card networks handle the merchant and the card-based payment. They include the authorization. They include the clearing and settlement. So when you swipe a card or tap a card, authorization happens immediately, but final settlement may happen later. Correspondent banking supports the cross-border payments where banks may not have direct relationship or may not have direct access to the local payment system. Securities or treasury settlement deals with the institutional movements like forex, foreign exchange settlement, bond settlement, or security settlement. Um, so the rail determines the speed, risk, cost, settlement model, and the exception handling. Now let's try to understand about the banking relationship and why cross-border payments are more complex. So in domestic payments, banks may participate in the same local clearing or RTGS system, but in cross-border payments, banks may not know each other directly. So that is why we need the banking relationships. such as direct participation, correspondent relationships, sponsor relationships, nostro vostro settlement arrangements, forex or foreign exchange settlement relationships, and bilateral messaging relationships. So, in simple words, cross-border payment is not just one bank sending money to another bank. It may involve currency conversion. It may involve correspondent banks, SWIFT instructions, sanction check, local rules, and beneficiary bank data requirements. So your domestic payment and cross-border payment very much are very much similar to your domestic trip and international trip. So for a domestic trip, you may only need one train, whereas for an international journey, you may need passport control, currency exchange, connecting flights, immigration check, and local transport. So cross-border payments are very much similar to your international travel. Cross-border payment has is more complex compared to your domestic payments because it brings or it includes more validations. It needs more validations, more systems, more participants, and more chances of delay or repair. Um, Now, let's try to put the full ecosystem together in one conceptual map. So, try to focus your eyes from the top. At the top, you see the customer, corporate, or merchant initiating the payment. The instruction enters through a channel. The originating bank captures the instructions, and inside the bank, multiple systems and teams may be involved. For example, compliance, AML, fraud, core banking, treasury, payment hub, liquidity. Then the payment moves to the external network or rail, such as domestic clearing, SWIFT, correspondent banking, card network, instant scheme. Then it goes to the settlement stage. So, in settlement may happen through the central bank or through correspondent announcements. Then the beneficiary receives validates the payment. A beneficiary bank receives the payment, validates the payment, post and remains repairs if required. Finally, the beneficiary customer receives the fund. So this diagram is extremely useful for explaining the payment flow to the stakeholders. So now let us apply this ecosystem knowledge to one real payment example. So this is a scenario of a cross-border corporate payment ecosystem. So an Indian company pays a US supplier in USD via SWIFT. So the corporate initiates payment with the Indian bank. The Indian bank sends a SWIFT instruction. Because the payment is in USD, a USD correspondent bank has to be involved. Then the US bank receives the payment and credits the US supplier. But this flow has additional participants. As you can see, the foreign exchange desk, the sanction screening, treasury, and liquidity and reconciliation team. The foreign exchange desk may convert the Indian rupee to USD. Sanction screening checks whether any party, country, bank, or transaction has any risk associated. Treasury ensures the bank has enough USD Nostro balance. Reconciliation matches the SWIFT message with Nostro statements. Now, the most important concept is in here is the message flow. The message flow and the money flow may be different. The SWIFT message tells bank what to do. Actual funds settle through the accounts, usually Nostro accounts, with the correspondent banks. And beginners might think SWIFT moves money, but in simple words, SWIFT usually moves messages, not the money. Okay. Now let us understand why messages why message uses depends on the ecosystem. So the originating bank uses message to instruct the next institution and carry payment details. The clearinghouse uses message to exchange obligation between the participants, the banks. The correspondent bank uses messages to identify who pays whom through which route and in which currency. The beneficiary bank uses messages to identify the sender, the receiver, amount, charges, compliance data, and then the reconciliation team uses references and statements due to the match actual movements from the message. So one business event may produce many systems and the message events, customer instruction, internal validation, sanction screening, um, and so on. Um, in simple words, one payment is not one message. So one payment can create a chain of messages. So every participants in the payment chain is highly dependent on the message for its operations. Now, um as you can now let's look at some common ecosystem issues and how to think about the root causes. So payment issues can happen at many points throughout. So general issues such as wrong routing, indirect participant failure, clearing system outage, central settlement delay, missed correspondent cutoff, insufficient notes balance, beneficiary bank repair, sanction hold. So this basically come as a general issues. Now, if payment is sent, issues may also include like the payment is sent but not received. So and the possible reasons are clearing but not completed, correspondent bank hold, beneficiary bank rejection, local scheme unavailability, liquidity delay, wrong bank identified core or compliance review. Um, while processing salary file, um, uh, the issue that might appear due to reasons like invalid beneficiary banks, duplicate records, cutoff breach, account validation failure, or rejection by scheme. Then card transaction may get delayed due to various reasons such as authorization, clearing bets not yet completed, acquirer settlement delay, scheme timeline lag, and so on. So many beginners may ask, like, payment failed, what is the reason? But as a strong, someone who is strong in payment would say, let us look at the failure layer first. Okay. Now, let us convert the responsibilities of the participants into a practical metrics. So, let's start with the originating bank. So, as you know, originating bank does the validation, compliance check, debits, and routes the payment. It can reject the payment, and whether it can reject the payment and whether it settles directly depends on the ecosystem. The clearing system exchanges nets and transmits obligation. It may reject or return transaction, but it usually does not settle directly. Central bank operates settlement and provides settlement accounts. It rarely rejects your payment operationally, but it's a direct settlement authority. The correspondent bank helps in routing and settles across jurisdictions using Nostro account. It can hold your payment, reject the payment, or repair or put the payment in repair status. Beneficiary bank receives validates and credits the beneficiary. It has the authority to reject if data or account details are wrong. Then compliance or AML can hold or escalate the suspicious payments. Treasury indirectly affects the payment by funding accounts and managing liquidity. The payment scheme defines the rules but does not usually process or settle individual transaction. Scheme basically look into the governance. So this matrix is very useful in workshops because it removes the confusion around the ownership among the participants. And with this, we come to the end of this session. In this video, we covered the full banking and payment ecosystem. Hope you were able to grab the concept with clarity. Thanks for watching. If you like the video, do subscribe and share with your friends, and do post your queries or feedback and suggest if you want me to cover any other payment related topics. Till then, happy learning. See you in the next video. Bye bye.